How's it going, everybody? My name is Retta, and I believe yesterday's video we talked about avoiding day trading, and we talked about how you should play safe multi-day option swings, dividing your cash up and understanding risk and understanding probability, so that you can grow your small account and replicate my $70 to $2,000 account push that I showed in the last couple of weeks. But a lot of people were asking, hey, Retta, we know that spreads are the way to go. We understand charting and the basics. We understand the options basics. But I'm having trouble finding something with a 30% probability of profit and a 300% win rate, or 300% win, or 300% once you win. So today's video is going to be super small. It should be just a couple of minutes, and I'm going to show you my favorite website to scan for option swings. So I'm going to show you what I go through to figure out whether I want to scan for or whether I want to play a spread. Obviously, the first way is, okay, you see, you're trading all day, or somebody in the chat room says to you, remember, I forget that this is YouTube. From 9:30 to 4 p.m. we are live every single market day on Discord with hundreds of members. So there's tons of people sharing ideas and whatnot. So maybe you see an idea that somebody else had, you throw it up on your chart, and you're like, oh man, I really like this play. I'm going to take a spread on it, or whatever the case may be. And then you check out the options chain, and you find something with a good probability of profit and a really, really nice winning percent. So that's the first way. But the second way is a bit more manual. Let's say you're looking for, okay, I just left my last spread, I'm looking for a new one. How do I scan for it, right? So my favorite website, I have it up right here, is called Barchartcom. You see, I'm a premier member with them because I really, really like the way that they built their website to scan for spreads. So you can go through here on options. You can see advanced groupings. This will show you, you can scan for all kinds of straddles and strangles and iron condors and naked puts and covered calls and stuff like that. But for the main part, let's say we wanted to do, like a bear put spread, right? If we did something like a bear put spread, you can see, for example, this one has a 25% probability of profit, right? And 566% profit at expiration. But you're more than likely going to cut the play before expiration. Let's say it goes up like 200% before expiration. It's pretty safe to leave it there. I usually tell people to leave around 100%, but these are percentages at expiration, right? So for them, let's see here. For the main part, this is it, but you can set a filter also. So these are less than 60 days to expiration. So you can do 60 to 100 days to expiration. You could add weekly expirations. So you can see these are all monthly expirations. If you go back to the results, these are all expiring on the 17th, which is 18 days from now. Or I'm sorry, I think this is the 31st month, so 19 days from now, right? So you can set, how far out or how much volume is going on. Usually I do, the best way to run it, I like the ones that they have set, but you can do all kinds of things to this to set a bunch of stuff up. And what's nice about their paid, I don't know how much it is per month, but I can set up email alerts to my primary email, and at the end of every single day, it will send me the results for scanners that I build, right, which I really, really enjoy. But let's say you see this, you say, okay, all right, Uber, there's 600% profit. If I take, these are the two legs right here. So, and 25% probability of profit, right? So this is the likelihood of it breaking even. This is calculated, by the Greeks, which we've explained before. So let's see here. The maximum loss is $2.40. The maximum profit is $13.60. That's 566.67%. And this is a bear put spread. So we expect Uber to go down in value by the time we hit expiration, right? So we got to go down to 24, or just below 20, or 23.50. And if so, by expiration, we go down below 23.50, we're going to make 566%. Obviously, if we drop $1 or $2, we're still going to be making, it's progressive. It's not like 1 minute you're at 0 and the next minute you're at 600%. Now it's like 10%, 20%, just like a regular play, right? So the first method, I'm going to type this out here, is check based on ideas you see active while active in the market. So ideas, maybe you're in the chat room, hear something in voice, or you hear something in the main chat, you're like, okay, I like this idea. Then you can check based on that. That's the first way to scan, I think, for a spread. The second way is the second way is use a scanner, aka I'm gonna put bar chart in parentheses, bar chart to find plays. Okay, so let's say we've done that. Let's add some bullet points. These are the two main ways. Now, what do we do after we find them? Obviously, vet the plays based on the chart, and make sure you do the math. Do the math manually to check the profit. Right? So this is definitely the way to do it. I would say do the math manually to check on the profit and make sure you check the max loss, because sometimes these websites can be a little bit delayed. But do the math manually. That's my main tip, and then vet the plays based on your chart. Don't just go blindly taking stuff like this. But remember, the main idea here is that let's say you start off with $1,000, right? $1,000, and you divide Okay, so then you divide into 10 lots of 100, or let's say we'll do 5, just because the math is a little bit easier with 20% rather than 10%. Into 5 lots of 200, right? And then you take one trade at a time. Right, so in this case, with 500%, obviously all you got to do is win once, and you'll be making money at 566%. But let's say with like 300%. So remember, if we lose 100%, we make 200%, right? Let's say now we're break even. Then we make 100%, right? Now we've made money, and then we lose again. You see how those 2 wins out of 5 can still make you some cash. This is really, really good risk analysis. And that's the way that trading should work. That's the reason why I recommend swings and spreads for any new beginner. Day trading is not going to work for you. This is the way to work when you can see the numbers in your head and understand exactly what's going on. That's the way that you're going to make money over time, obviously. But yeah, so you divide the money into 5 lots of 200, then you take one trade at a time, and you want to hit once out of 5 or once out of 10 or whatever your idea is. But for example, this Uber trade here, let's put Uber into our chart. We'll take a look at it. Okay. You can see Uber is still at 27, I believe. So what's cool about Barchart is they tell you when they let's see here. So the current price is 27.28, right? That was at close, and we need it to get down to 24. And you can see in the last week, Uber has gone down from 14 to 27, right? So all you gotta do is get to 24 in the next 18 days, and you will be making 600%. So that's the idea behind scanning for spreads. Super simple video. I hope you understand this. If you have any questions at all, obviously the Discord link is always in the description and in the first comment pinned below. You can join me there and ask questions to me directly, and there's hundreds of people in there, even honestly thousands of people in there that are trying to do the exact same thing as you. So it's a really nice community to build yourself on top of. Besides that, if you don't feel like doing something like that, leave a comment down below. I guarantee you I'll reply to you, and we can start a discussion down there. Thank you so much for spending your time with me today. I will see you guys in the next video.